Welcome back on the halftime report. Mentioned it earlier, Nvidia and the semis rallying. The company gets set to buy computing equipment maker Mellanox, almost $7 billion, its largest acquisition ever. For more on the semi trade, let's get to Bob Pisani with the ETF Edge, in which Pete was just talking about these, Bob, in unusual activity.
Yeah, it's very interesting today, Scott. Thank you. Semis are having their best day in a month with chip stocks following Nvidia higher. Nvidia is one of the top holdings in the SOX semiconductor ETF. That's the biggest semiconductor ETF, 7% of that index. Mellanox is one of the smaller names in that group. John Davi of Astoria Portfolio Advisors, Deutsche Bank's head of ETF sales, Chris Hempstead, joined me today. And John, we've got an M&A story with Nvidia today, but what's interesting is the earnings for semiconductors have come down dramatically from the fourth quarter into the first quarter. What are you telling your clients about semiconductors?
I would avoid it. It's one of these kind of like early cycle plays. I think right now the economy is very late cycle. So as you said, earnings growth estimates have come down about 8%. I think that's pretty excessive. So I would avoid the sector and the play, even despite the M&A news.
Chris, we have the same problem with FANG stocks all the time because in these semiconductor space, essentially 7, 8, 9, 10 stocks completely dominate all of the indexes. Even with the SOX, the biggest one far and away, more than 60% of the holdings is just 10 stocks right now, including Nvidia. Today, it's a good news story. It's dragging all these indexes up, but it can take the opposite effect like we saw with Boeing today. What do you do with your clients, and what do you do when people are trading these? You're a big trader in these stocks. What do you see?
I mean, look, we're gonna acknowledge the fact that there's a concentration risk to some of these sectors where you, like you said, you have 5, 6, or 10 names making up a huge percentage of the index. But that gives managers the flexibility to overweight and underweight individual names based on fundamentals. It brings active management back into play if they're not happy with the way that entire sectors are moving with a single headline of a single stock.
So you're saying it's sort of easier to get risk on if you wanted to because of the concentration. You buy 4 or 5 stocks, you own most of the index.
Exactly. If somebody needs to put on a large position in a sector like semiconductors, they can use ETFs to get significant size put on in a single trade, and then they can adjust their weightings accordingly on their own agenda.
Yeah, John, negative 8% earnings growth for the semiconductor sector as a whole this quarter. We're expecting flat to slightly up for the S&P 500 as a whole. Is there any argument can be made on a valuation basis at this point?
I wouldn't say so. I mean, and you're right. If the S&P is a little bit higher, it's about 4%. But I just think, given where we are in the cycle right now, you want to own stocks with above average growth compared to the S&P, that 4% threshold. So negative 8% for semis, that's like way too far low. So even though SMH is like 14.5 PE ratio, I don't think that's cheap enough relative to the growth estimates.
Okay, John and Chris, thanks very much for joining us.